Hey everybody, welcome to another episode of The Everyday Trader. This is Greg Jensen from OptionsANIMal. It is good to be with you again. I'm joined as always with my friend and colleague, Mr. Hale. How are you,
Hey,
Eric?
everybody. It's good to be here.
I'm also excited today to introduce you to a friend of mine. In fact, I've actually known Charan even longer than I've known Eric. Charan and I go back, gosh, Charan, almost 20 years now.
Almost 20 years.
It has been a long time. So Charan is a phenomenal trader. He is a phenomenal teacher. He's a professional money manager, and I'm not going to give the introduction, and I'm going to let him explain kind of his background and his path to doing what he does as well as he does. But I'm just excited to talk to you here today, Charan. So
Let's get
um,
before we get too far down the path, though. Let's get everybody excited. I'm really excited to talk to Charan too, because he was one of my first instructors. I joined shortly after, I'm a couple years after, and had the pleasure of learning from Charan, and he's sort of been a little bit of a mentor to me in a lot of ways, because he, even as I'm an instructor, he continues to evolve and come up with new ways of trading that blow my mind. And there's things that I'd be like, why would you do that? And then like Charles, I call him the king of the in the money covered call. The guy does in the money. Why would you do an in the money covered call? And he's like, dude, 8% easy. Like, oh, wait a minute. Probability. Put the probability aside. Anyways, really excited about having this opportunity to pick his brain and share some of his experience and wisdom with you folks. Charan Singh is his name, but also wanted to throw out that we're going to be in Las Vegas here in April. So April 12th and 13th, we're doing an event for our clients, both of Trader Oasis and OptionsANIMal. And if you're within a plane ride, which is pretty much everybody, you're missing a tremendous opportunity to get some live education. We'll talk about real trading. You'll come away learning more. These events typically sell for about $2,000 to $3,000 for these weekend events. We don't charge anything for our clients. You just need to get yourself there. So there's no excuse. And Charan, we just confirmed this morning that, or this afternoon here, Charan is actually going to be one of the presenters. So really excited to have him there. And
and if you
Charan,
want to hang out with me, the baseball season will be about 2 weeks old, so I'll probably be at the sports book hanging out watching baseball games.
baseball
I'm just
games.
kidding. I'll be teaching. I'll be there as teaching as well. I'm not going to just go hang out at the sports book. Maybe after.
And I follow no sports at all. So the rest
Not
of
even
you
cricket?
can hang out with
Not even cricket?
I saw the Super Bowl, but well, first of all, let me
Super
just
Bowl.
say thanks for having me on this Everyday Trader. This is phenomenal. I saw Karen's and other recordings, and now I'm really excited to talk about what we do, because it is so dark and depressing out there. I did a lot of education before I came here. Well, I'm sure we'll get into that a little bit.
Well, let's jump right into it. And so tell us a little bit about, your background. And I mean, where are you from originally? You got an accent. Are you from like
Yes.
Louisiana or something like that?
Yeah, so I grew up in New Delhi in the 70s and 80s. And, you know, my dad worked for the US government, which is how I have a green card and became a citizen 20 years ago. And I really grew up with the idea that, I mean, my dad's journey really influenced me. His father passed very young. He was 16. He took over. He didn't finish schooling, but he progressed nonetheless because of his curious mind. He reminds me a lot of you, actually, Eric, in that you're so curious. I mean, the student has surpassed the teacher. I listen to you talk about things and I have to listen to them a second time. And my dad was like that. He didn't have formal education, but like he instilled in me, I think, this idea that you can dream big and that you're going to the US someday. So I came here when I was 19. I came to Los Angeles from New Delhi. I've been in Salt Lake City, Utah, where I make my home with my wife and two kids since, gosh, almost 20 years, right? What Greg said. So it's been a, a journey I did not anticipate, because when I grew up, you're an engineer, you get this. When I grew up in the 80s, in India, you could be an engineer or a doctor or maybe a lawyer or a held it. That was it. So my career path was pretty well set, and I worked in engineering in LA for 10 years. And
Now let's back up. So you went to engineering school though, right?
yeah.
So who was
Yeah.
your classmate, by the way?
Oh, he runs a famous company now, you know.
Who's that?
He wasn't a classmate, he was a senior. He runs Microsoft now. So
Satya Nadella? Nadella?
yeah.
Yeah, okay.
That was a good engineering school.
So you went to a good engineering school, right?
I did. I worked hard. I
Come on,
worked.
let's be honest.
My high school.
Let's be honest. He's the best CEO on the planet right now. I don't think there's anybody better than him.
I agree. Yeah, but that was my career path. And then I really got into what I'm doing now over a very long span of time. Like I quit my job. I talked about that at the Vegas Summit last time I was there. I told the story of how I just couldn't go to work one more day. I just kept driving. And pretty soon after that, quit a 10-year-old job just when I was finishing my MBA at UCLA. Did not sit for any interviews. I'd made up my mind that I was going to learn how to trade. I was going to find people eventually that know what they're doing. And it took many years, obviously. And with the support of the people in the options animal community, I started my business. But like that all took almost 15 years to transition. But it can be a lot sooner. It's just there was too many educational companies that I was chasing and stock recommendation tips. I mean, I was all in. I quit my job making really good money 2 years after I got married, and living in Los Angeles with a house made $15,000 or $20,000 that year. And subsequently, for many years, I paid the price for giving up the safety of a job. But in the long run, that's exactly what I wanted. And with the support of Greg and what I learned here, and with the people in the community saying, hey, manage our money. Yeah, I've been doing this now 8 years. I don't know what my kids' life will look like. What I was able to do for my parents before they passed. My dad passed recently. And so there is nothing like the freedom that this brings.
But it wasn't an easy road, right?
I mean, it wasn't an easy road.
Yeah, you talked about newsletters, and how did you ultimately end up working at OptionsANIMal?
So I'd spent nearly 30,000 chasing education. Back in the day, there were many companies selling very expensive, like this Vegas Summit we're going to do in April. I'd go to events like that, and it was, like you said, 2 or 3 or 4,000. Half the time they're selling, not teaching. Half the time, like literally half the time. And so it's just a marketing event. And having quit my job and determined not to go back, I knew that I had to meet people eventually. I was willing to do whatever it took, go to New York or Chicago or wherever people are that can teach me what I need to know. And I worked for a company called Invest Tools, which is now defunct, I think, or got bought out. And I learned very quickly that they were very good at selling education, like a lot of companies, but not at all good at trading. And then a coworker of mine found Greg and came back super excited, saying, hey, I found the Holy Grail. You got to come work with this company. They quit. They quit. They moved to Greg's company. And very soon I followed in their footsteps, because I could see something that nobody shows, which is live trades beginning to. I've not seen any educational company with years and years and years of a new trade every week where you can follow from beginning to end and see that, our track record goes back. 2009 was the first weekly animal trade in the options animal community that I did on Monsanto, which got bought out. And 90% plus of those positions make money. And what I found in Greg and OptionsANIMal was really risk management. It's the one thing I mean, we've met so many people over the years at events, right? We've heard the horror stories of people using options and blowing up their accounts. And I was on that path initially. I had no idea that you could use options to lower risk. You know, it was all like a fun gamble with little money till it gets serious.
But let's be honest, Chart. I mean, nobody comes in the door. I meet people that in the industry, in the finance industry, the fintech industry, economists and CIOs. And when I tell them what we do, I usually get a, kind of a, oh, wow,
Yep.
you trade options. And what I
What's
explain to
wrong
them
with you?
is exactly what you said, is that it's about risk management. And I think anybody who's taken the CFA exam or whatever, who knows, even though they don't use them, they understand that options originally were created to manage risk. And
Right.
you can do whatever you want with options. There's all sorts of things. You can turn it into a casino if you want. But I don't think people come to either one of our organizations saying, hey, I need risk management. What people come for is, I want to make money, and they're attracted. The same sort of motivations that you have is, when I look at people out there that want to manage my money, for most of the part, I'm at least as smart as they are. And I know I care about my money more than they do. So
Right.
that's what motivated me to come here. I thought your story was pretty inspirational. I use you as an example of having had exposure. First of all, you spent a lot of money and then you worked some other places. But the same thing resonated with me when I was looking to sign up, and say, these guys are not only teaching it, but they're actually doing it, and they're willing to share real examples.
Right.
And that meant a lot to me. Let me throw a curveball at you. You didn't know I was going to ask you this question, but my wife asked me this question. She's like, okay, so if these guys are so good, why do they tell anybody about it?
Yeah, I mean, you think about that for any profession, really, right? It's not just for us. So, one of the things that really makes sense is when you've discovered something that is, if you put in the effort, it's not like, we have over 50 classes in the curriculum. It takes some time to get through that. And even when you learn it, it's like I can explain to you the rules of baseball or poker, but that's not going to make you a good player.
Right. Yeah, for sure.
And so it's not like there are some secrets or tips and tricks. It's just discipline, a duplicatable process, risk management, allocation of how much money you're going to, all the things that trip people up. And it's not, if everyone in the world knew what you and I and Greg know, that would not take any money out of my pocket.
Right. No,
it just
in
make
fact,
for more
if
liquidity
more
in the
people trade
markets.
options, it's good, right? I can sell you a call. It can go up. You can make money. I'll sell my stock. I make money. We can both be on this. I want more liquidity. So
yeah,
I
it's
tell
not
people,
like
I
I'm
want
giving
more
away
people
some
trading.
patented secrets. That's the thing. It's,
Yeah.
To answer your question, the more people know about this, the better. Why did people who discovered penicillin share it with the world? And again, it's not something that's going to diminish the experience or our ability to do what we do at all if everyone knew what we knew.
But there's probably some other side of it too, because I think your personality is a little bit different than mine, but I personally gain a lot of pleasure from being able to help people and affect their lives. What's motivating to you? You've got two roles, so let's focus on the instructor, and the latter half of this we'll talk more about your other role, which is pretty exciting.
Right.
As an instructor, what's most rewarding to you?
Knowing that there are people, and this is why summits like the one that's coming up is so important, because I felt for the first time after teaching online, meeting people, it really presents to you what it means to them in their life, right? Which is not something you can get by just talking into the screen for a class. And that really motivates me. I get what a heavy burden it is to do what we do. There are lots of charlatans in this space. So it's like, you can have a good insurance salesman, but they're not going to have a good reputation ever. So this is an honest company that I found a home in, like you did.
Yeah.
And it's it's really exciting when somebody asks interesting questions. You can see their learning process over time, and that's very rewarding.
I think it's interesting that our newest coach is Joe, and he's the new
Look at
guy.
him.
He's been here what,
Phenomenal.
8 years?
Yeah.
That's the
Phenomenal.
new guy, right?
Yeah, I love the culture of the company because every one of us was a student here and committed to this, in a big way. Um,
So
so
what classes, we talked about, 50 classes, and I have some perceptions about you and certain classes you teach a little differently. Do you have a favorite class to teach, or a favorite family or favorite strategy? What are you most
yeah,
passionate about teaching?
uh, so options can be used, as you know, for gambling, like you said, or for income, or for risk management. And when I first started, it was all gambling because I didn't know you could do anything else. And in the companies that I learned from, they never really taught that there are other things you could do. And then over time, I also realized that, hey, you know what? This trade, it can make 100% in a month. Am I looking to do that with my life savings? Is put it in positions that can make 100% in a month? Really? There's a class in the 6th level, and I forget, it was a long time ago, but the instructor that taught it said, what are your life goals? Like if you're 30 or 50 what are your goals? What is the return you need? And in my journey, I realized that I need 10-15% a year on average. I don't need super high returns. And this education allowed me to tailor what I need and do the strategies. Out of the 8 levels of our education, the 3rd level we teach covered calls, very popular strategy out there. I teach a different version of that in the 5th level, the in the money version, and credit spreads are those 2. Covered calls and bull puts are my favorite strategies, and it's because I've come to those and the application of them, because that gets me the reward I'm looking for with the least amount of risk that I have to take to make money.
That's so important.
So
You
I
mentioned
just don't do anything that is outside, especially for my clients. Now, in my own account, I gamble sometimes because
Right.
why wouldn't you?
So yeah, I mentioned earlier, I call you the king of the in the money cover call because I like probably 95% of the people initially thought that a covered call, you buy the stock and you sell a call out of the money. And if the stock goes up, you try to avoid assignment by rolling. And I never really, it was you that made me like a swift kick in the ass, to be honest with you. I had to stop and think and look at the math and say, wait a minute, it's not that smart. I mean, I'm adding duration, I'm adding risk, I'm adding capital to my
Right.
trade. And if the stock goes down, I'm going to lose more money than if I didn't do anything. I mean, you really got me to flip my thinking, and I guarantee there's some of our listeners right now that are like, what?
What are
And
you
in the
guys
money covered
talking
call,
about?
you're going to sell your stock. So what to the person who's right now saying, what is this guy nuts? He doesn't know what he's talking about. In the money covered call, why, Charan?
You buy a stock at 100. Normally, you go say, "Hey, I'll sell it for 110. I'll sell a call option at 110, and then I can make some money from the call option money that I'm collect cash now, and then another $10 or more in the stock." But what if you bought a stock at 90, at 100, and sold a 90 call? You're buying the stock and saying, "I'll sell it to someone else for $10 in losses right now." You can do that because maybe when you sell that 90 call, you get $15 of cash today. So you bought a stock for 100, you got 15 in cash, out of pocket you spent 85, and you have the obligation to sell your shares for 90. So you can make $5 on 85, and that could be done in 2 months plus a dividend. I mean, that adds up if you look at what that would do annualized. Again, it is very rewarding when it's like a light bulb turning on when they go, oh, wait, I can take less risk, make less money, but meet my needs. And that is the point of risk management and suitability.
Right. I think when I think about people who, when that clicks, it's the difference between, we got people here who do this as a hobby. I think we go to a summit on the West Coast, and there's this one guy who shows up in the Bay Area, and he's probably listening to us right now. He comes to every single one of our events. He's never spent a dime with us. He's never joined. And when I
I
got
know
to talk,
exactly. I know exactly.
I know. I think I know who this is.
he's very there's a local organization out there. He's like he's a chairman emeritus. He's run this group. It's been around for 20 years or longer. And it's all a bunch of option traders who get together. And when I talked to him about, the collar tree, he says, I don't have enough money to buy the stock. I'm like, what? What? And he's a hobbyist. And it clicked to me that I realized, like, this guy, he doesn't really he likes creating what I call doll houses. So my sister wanted a dollhouse when she was like 10 or 12, and my father and I spent weeks building a dollhouse. It's almost as much work as building an actual house, like nailing on shingles with little hammers. It's so much freaking work for so little product. And I see people doing some of these option strategies where they're putting in a ton of work, a ton of effort, and for this much return. And it's I get it. This is a hobby for you. You're doing this because you want to build a dollhouse, not because you want to make money. And that's the difference with people who have significant capital, like you and I know you have capital and you manage a lot of capital, that you need to really look at your goals and look at objectives and do things differently. It's nice to have some of those neat, cool hobby type strategies available, but man, you are boring, Charan.
I like that. And it's not like I started here. I mean, no one in options starts where they end up. Most people probably, without a helping hand and education, lose to professionals over time. Warren Buffett at Berkshire Hathaway, day trade options. I mean, it's not like some boutique thing. However, without an education, it is just, I mean, I could not have figured this out on my own. There's no way.
No,
I would have paid too much in price.
I'll take that back. I agree with you, but I'll take it back. You could figure it out.
Not
the question is, how
not
long would it take you, and how long would it take you, and how much would it cost you?
Exactly.
I have an answer for that.
And so,
what's your answer, Greg?
Well, I'll give you my answer. I mean, I did figure it out on my own, essentially.
Exactly.
And it was about 2.5 years and about $800,000 in losses.
Yeah,
that was my price
That's
tag.
why he has white hair and I don't, because I learned what he learned.
That beard.
I learned from him, and it was like a shortcut. It's like a wormhole. You're on the other side of the universe in a much shorter time frame.
$800,000 doesn't sound like that much. That was 20 years ago, Greg. More than 20 years ago, right?
Yeah, that was 19. I was trading in the late 90s, and it was
90s.
the internet, when the internet bubble blew up. So it was really 2000, 2001. So yeah, 20 some years ago.
Making money and not knowing why, like, I must be good. It makes you think, I must know what I'm doing here, right? Then the market gives you a harsh reality. So,
and also, Eric, just like in poker, you know what's the right move sometimes, and you still make mistakes. And you go, I did that. After I was educated, I did that. Right. I had a naked call. The last time I ever had a naked option in my account. This is a long time ago. But I remember we were struggling and I wanted to make more. And I thought, man, what a way to make more. This very high probability, it's 90% chance of making money. And then when it blew up, I lost, like, it wasn't life-changing, but I lost like 10 or 11,000. And that was money that I could not afford to lose. And I remember the shame of hiding that from my wife with a young, boy.
Shame is the right word.
It was shameful. And yep, we all have. If you've been in the market, it's humbled you for sure.
Hey, let me go back to your favorite strategy, the king of the in the money cover call. If I pull up my risk analyzer, that looks the same as a naked put.
Yeah, absolutely. And there's
so why don't I just do naked puts?
I've done both. You can have two different things with exactly the same risk, but the ability to manage risk when everything blows up is radically different. And that is the reason I do what I do. I don't do naked options. And because when you get in trouble, even though you have, let's say, $1,000 in risk in both trades, you have a much higher chance of losing money when you do a naked put, because you wake up, the stock's down. What are you going to do now? You're already in a hole.
Right.
And your choices, this is one of the things, this is the thing that I came to OptionsANIMAL for, is that when I do wake up to those horrible, positions, do I still have hope? Have I worked out in advance that there's a path back to profit, or at least a small loss in every position I take? And there's no way I can do that in naked puts.
No. They're only the
So-
same if you actually end up buying the shares, because the thing about a naked put is when you close that naked put, you permanently booked a loss. That's like
Exactly.
negative cash out of your account gone. If you have a covered call, and this, first of all, with a naked covered call, I mean, with an in the money covered call, when the stock's dropping, you're making money on your short calls, so you don't mind so much. But when it starts getting lower than where your cost basis is, you just roll the short call, and you're
or
not
buy
booking any
puts or do
loss.
other things. You have choices that are
Or buy a
much
put, yeah,
better
turn
and
it into a call
easier.
trade, yeah. But when you have that naked put and you close the naked put, I actually had this conversation with you. I don't know if you remember, because I was a believer in naked puts for a long time. Like
A
Charan,
lot of
naked
people
puts the
are. I
same.
don't know
And
who's promoting it out there. It
I-
is the root cause of the worst stories we have heard. Naked
It
options.
is. It
Yep.
is. It is. And we have a client who's a dentist, and he probably listening right now. I know he wouldn't mind telling. I'm not going to use his name, but he was doing so well with a naked put newsletter that he retired from
Yes.
from his business, and he was sold his practice. And he said the Thursday before his last day, he said he was having his good day party was tomorrow. And he took such a loss on that Thursday that he would have to work 2 more years to recover from what he was lost. Just follow a newsletter every week that came out, sell these naked puts, sell these naked puts. And the guy had a track record that looked great. And I don't know if the track record was BS or not, but the thing I tell people is if you sell naked puts, what happens if the stock drops 20%? And an answer I hear is, well, that I've done it and it's not happened to me, but you've seen it happen elsewhere, right? It's like turkeys living on a turkey farm. Life is great, you get health care, you get place to live, there's no threats from predators, you get food, you get water, like everything's great until October, right? That's just everything I've done my whole life is what I should expect. And that's just, but you can look around and see other examples. Hey, stocks dropped. Look at Tesla's down today, what, 8%?
And ironically, with your analogy, Eric, October's a good time when the market decides to sometimes
Sometimes.
take the turkeys out for dinner too.
Tesla's down. It's up a little bit. It's down 7.2% right now. It's just big move down in Tesla. Good stuff, Charan. Let's pivot more towards what you like to trade. So are there any specific industries or stocks that you like to stick around? ETFs, not ETFs? What's your thoughts?
ETFs can be fine. I prefer to do individuals, bottom up analysis. A lot of the companies that I trade, I've traded for 5, 10, 15 years. Same companies. Some of them go nowhere for 10 years. They just trade in a range. And that's great for us because we can use selling calls, collecting dividends, and make 10, 15% on a stock that goes nowhere in a year. That's one of my favorite things. Another one is dividends. Everything that I buy, I prefer if it has a dividend. Now, there's some companies that are great, like Amazon, that don't have a dividend, but like usually 70, 80% of the things I own pay a dividend. So I have a stock that pays 5% dividend. If that stock falls for a year or two, it's going to give me 10% back just in dividends, lowering my cost basis forever. And I can do a lot more reduction of cost basis by using options. In terms of sectors, I mean, it's different year over year. My basic philosophy is I try to buy things that are not in favor, right? I would not be buying Nvidia, for example, right now.
Oh, come
I'm
on, it's up
buying,
$50 today.
I know. I'm looking to maybe before the end of the day or end of this week add to my Pfizer position.
There you go.
And so I'm usually looking for, I have this very long list of potential stocks that I would invest in or trade. And I look for the ones that are not trading at crazy valuations. I mean, there's only one time I've gone away from what I do. And it was a really bitter lesson in 2021, late 2021, getting into more than usual companies that did not pay any dividends. In fact, didn't even make any money. They had a lot of growth, Palantir, SoFi, other companies like that. And when they tank, they can go down 90%. Then you have no confidence that you're going to buy more. If I buy Pfizer and it drops 90%, I'm definitely buying more, almost certainly, depending on the news, right? So I stick with larger companies that pay dividends, that I can get good money in trading options. I like selling options, mostly selling calls against my stock. That way you can build a portfolio that makes 5-6% a year or more simply because time passed. And competing with the yields that you can get right now in the treasury market and beating them, and with the upside of the stock going up and dividends on top of that. So I really like those. This year, I really like financials. I think this recession risk, a lot of these stocks got knocked down so hard. I think Citi in particular, James Frazier there, that looks like a turnaround, a multi-year turnaround, is finally starting to show some signs of like green shoots. I also like some industrials because of all the government spending that's going on. And I really, really like healthcare. Like I mentioned, Pfizer. There are many companies that are paying 3-4% dividend. They keep jacking their dividends every year like clockwork. They go nowhere. But again, stagnancy is very, very good for option traders, I feel.
I've had this conversation with you before, Charan, and I know you and I both trade the oil space. What are your thoughts on that theme of stocks to keep jacking their dividends? Are you still looking at oil right now?
My favorite is Kinder Morgan, KMI. Right now, they pay 6.7% dividend. Right now, they keep raising it. They raised it during the pandemic. When we saw what happened with oil futures going $40 negative per barrel. They're very low correlation to these underlying natural gas or oil price. I hate equities that move twice or 3 times as fast as that, right? There's a lot of commodity plays that are super volatile. I don't like that. I like refiners like Phillips 66. I like pipeline companies. I find that recently when oil fell, I know it's rebounding now, but look at KMI, Kinder Morgan. They went up when oil was coming down. And I really
Kinder
like
Morgan's
having
they're the pipeline, right? So they're
pipeline company. It's
just
very hard
making
to
money
build
on
new
what goes
ones.
through.
Yeah, and you're not going to have more regulatory approvals for more pipelines. So individual names more than a sector theme. But there are certain years where the sector had a horrible year last year, and it's just too cheap to ignore.
I don't know if you saw this morning but ExxonMobil's been removed from the S&P 100 now. I forget. I don't know who took. I forget who took.
It was the largest corporation in the world.
Yeah.
At one point.
Yep. It's interesting what's happening there in oil, but like you say, they pay great dividends. So industrial is industrial KMI? Is that what you consider? Kinder Morgan is what you
so
consider
no
industrial?
that's an energy play. No, I'm doing industrial. Like I've been in and out of Boeing, and also RTX, which is Raytheon. Raytheon, it's the new Raytheon with the mergers, so it's called RTX now. Again, they pay a small dividend, and they got knocked down and came onto my active list from being inactive because they were just too cheap.
So you've been giving people love this part. We're throwing out some names to look at on a watch list. You mentioned healthcare. What sort of healthcare companies? Pfizer, is that it, or any? What about the insurers? Or
Pfizer is relatively new. I'm looking at Bristol. I don't have a position. I took a small position in Pfizer because it's been going down, and I don't know where the bottom is, but I don't think it's going into the low 20s, and it's almost there. So the ones I love the most are CVS, and Barron's had a very negative story about CVS and the pharmacy burnout hours and all of that. But I'm not looking for stocks to double. If CVS goes nowhere and trades like this in a range for another 5 years, great. Another one I love is Gilead, GILD. This is a very large, 100 billion plus biotech firm. I've been trading it for almost a decade now. They keep raising their dividends. They go nowhere because a lot of these companies, Bristol is the same. They have free cash flows. They have dividends. They don't have growth.
Let me ask you a question.
And
So you must have heard, you don't need any of this because unlike Greg and I, you are like, you look like a freaking male model. You're very svelte and handsome looking.
I'm coasting on my genetics.
Yeah, is that it? Well, good for you.
Yes.
You eat healthy and
I'm
you take
50
care of
this year.
yourself and you always look good. But these GLP-1 inhibitors, these weight loss drugs are insane. Last week, CNBC came out with a piece on these things, an hour-long deep dive that's getting a lot of attention. But do you have any thoughts on the Eli Lilly, Novo Nordisk, the whole GLP-1 phenomena, or is that not your, or is that, what's your thoughts there?
Yeah, so you look at the two leading companies, Eli, they're not cheap now. I don't generally run after fads. I don't think this is a fad, but like you know, like there's certain companies that break out and it kind of makes sense to you. Eli Lilly makes sense to me. Uber makes sense to me as well. I mean, that completely broke out to new highs. It's just I found that when there's a lot of excitement, like with AI, things get a bit out of hand at some point. And so I haven't done, I mean, the last episode of Everyday Trader or a couple episodes ago, Dr. Ari talked about GLP-1s, right?
Right.
I don't feel competent enough like he is in being a doctor to where I could have an investable thesis around something that's run up a lot. But it's on my list. Awesome. If it pulls back and the market pull back, I'll probably definitely come back and take a second look.
I think that's fantastic.
You got to stick to your knitting. I'm an engineer, so I stick with tech and stuff I can understand.
I think it's fantastic. You understand where your sphere of confidence is and competency, and you know, being able to say, listen, I don't know anything about that. I'm just going to watch it. And that's, you know, there's certain equities and people ask me about certain things. I'm glad if you, yeah, it's good for you. If you trade it, you make money or whatever there. I don't understand it. And that's not my circle of competence. I'm not going to venture out there, keep an eye on it and look at it. Think it's interesting.
That is a hard lesson though, because when I was a student, I would follow those stocks that my instructors were doing.
Right.
And then I found out when news changes and the stock's down or up, I have no context for what the heck happened. Is this real? Does this make sense? Is it an overreaction? Because that happens every week. And if you know a stock and read about it, and it's like a friend or an employee is kind of how I think of them. Just getting to know them over time gives you, because market will, Phillips 66 PSX, the refiner I mentioned, it went down to $40 not that long ago, twice. And it made no fundamental sense, but there it was day after day. And so if you know something about the company, you can have more confidence and step in when everyone else seems to be making a mistake at extremes.
So let's talk about when you're looking at maybe a new company or trying to stay on top of the ones. What resources do you use for evaluating companies? Do you have any specific ones or general?
Yeah, the best free one is and has been for a very long time Yahoo Finance.
Okay.
They have paid portions as well, but if you're a home gamer and you want to do this, you know, Yahoo Finance, probably number one. They have a really good app. I mean, I don't know how this company is giving away nicely presented data for free. If they said it's $5 or $10 a month, there's no way I wouldn't pay that. I just think it's a poorly run business from that point of view, but it is a fantastic resource. The other one is FinViz, financialvisualizations.com. Again, they have a free and a paid site. Both of these are really good resources for free. I go to nasdaq.com. Again, another free, fantastic site. They have very good dividend information and some other things. Short float, you can see trends over time. I've also used almost everything that is a paid source that I can afford. I've tried. So my two favorite are Morningstar and Barron's. Morningstar, I think I'm paying 250 a year. So I'll give you an example of Raytheon RTX. It was on my inactive watch list, and then something happened a few months ago where it gapped down on news. And I went to Morningstar immediately. The next day, they had a note saying, hey, here's what happened. Here's where we are adjusting our price target or not, and so on. It's very useful to catch up on a stock, a full report from an analyst who doesn't have any conflicts of interest. For $250 a year, almost everyone can afford that. And I find it especially useful. I bought RTX in August after a huge gap down. Guess what happened the next one? The next month, another big gap down on another piece of news. And immediately Morningstar said, this makes no sense. This is insanely egregious. And that gave me the confidence, along with other analyst notes that I read, to say, okay, I'm not going to panic. I'm maybe going to add to the position. So Barron's is also very good. I've used them for over a decade. They're a little bit pricier, but a few hundred a year, maybe 300, something like that.
I love
very
the
good
Saturday
resource.
paper. Barron's
Yes,
does a great job.
I'm old school.
Yeah.
I'm using the pencil that I had in high school.
And you like reading the Saturday paper, right? Too.
I like paper. I like my fingers.
Jack Hoff is hilarious. I mean, Steven Sears. They're a great group over there at Barron's. I love Barron's too. I was going to throw out as a pro tip or as a tip for people. I get Morningstar free from my library. So check out your local library, maybe even your local community college. I can get a free community college email address. If you take a class, they give you a local community college email address, and they also have some resources probably in your school library. Yeah. So but I'm like you, I would pay for Morningstar if I didn't get it free from my library.
If I could just pay for one thing and one thing only, it'll be that.
It would be.
I mean, I use many other paid sources because I manage money for a living, but those two are more than enough.
Y charts? Weren't you using?
I love Y charts.
How much? That's expensive though. How much is that?
Yeah, it's pricier, but no, I don't remember, to be honest. I think it's maybe 500 for the basic membership, and it goes up from there.
Okay.
But again, it allows you to look at fundamentals of a company in like chart form. So very useful. And the reason I'm using more sources is, look at what happened this year. I had new money coming in, which was all cash, at a time when the market is at lifetime highs. How do you go deploy that? So I need, unlike most people at home, I need a bigger selection of stocks, because I'm not going to buy for a new client now what I did 6 months ago or in October when they were much lower prices. So resources like this help me be more efficient with my time.
Yeah, rolling new money. That's an interesting thought. I've got some interesting experience to share there. Let me throw another one out for you. If you haven't looked at Koifin, so there's a guy named Rob Koifin. Koifman is his name, but it's KOIFIN.com. They also kind of a Y charts competitor. It will let you do things like this is the place I go to look for short interest, because you can go back 20 years.
Yes.
See a chart of short interest. You can also plot everything if you want to plot like PE, future PE versus the stock price, or free cash flow versus stock price. So check out Koifin. The basics are free, but if you want to do a certain number, they limit you. But I think you might like it. I know Y charts is out there, and I was using Y charts for a while. When I looked at it, I think they wanted $2,000 for me. So I was $2,000 for years, a little on the high side.
It is, again, compared to what professionals use, which is like a Bloomberg terminal, which I couldn't afford. Y charts is expensive, but for a professional, it is reasonably priced.
Okay, good. Well, glad. So speaking of I guess any other thoughts about what you do for due diligence when you're looking? You talked about fundamentals here. What other what do you do in the area of sentimental or technical analysis?
So again, I've evolved on that quite a bit. Obviously, sentiment can have complete veto control, like Phillips 66 PSX trading at $40. It made no sense fundamentally, but there it is. I think I place much higher weight on fundamentals and how the economy and the economic cycle is doing than I place on sentiment and technicals. I love technicals and I love watching sentiment, but my evolution on that is to do the opposite at extremes.
I'm with you.
So when the sentiment or technicals are really out of whack, bullish or bearish, I want to do nothing, or if I do anything at all, I want to go against the flow. I find that using sentiment that way is the most usable part of it, because most days it doesn't tell you anything, but occasionally you get pretty extreme on a stock or in the markets, and then it's time to start thinking about the opposite. But I again, overall, because I've also evolved in doing longer duration positions. So some of the positions I have for clients run a few months or a few years. And if sentiment or technical are ruling for a week or two or a month, it's a blip in the lifespan of the position. So again, that's another reason I think it matters less. And also, I can't really hang my hat on technicals or sentiment. I can say Pfizer below 20 is incredibly cheap, fundamentally. But if Pfizer is just oversold on a technical chart, I mean, it could go to 20, 15, or 10. I don't know what I can hang my hat on in that situation. So that's the order. I look at fundamentals and economic, but sentiment and technicals also play a role.
I think you and I are a lot alike.
Very similar.
Right?
Yeah.
I think technicals are like driving your car, looking in the rearview mirror. They matter
Exactly.
Until there's a stoplight, then there or a T in the road.
Yep.
What has the stock done in the past? There's something to be said for that. Where's support, where's resistance, where are trend lines, and I wouldn't throw technicals out the window, but
not at all.
I've met people who say everything you need to know is in the chart. Those are the people I avoid. So
that's where I started. Who wants to read filings with the SEC?
Right. Boring.
Or listen to analyst conference calls.
Right.
If you could just have a site tell you it's A, B, or C, or D stock grade, then you can just focus on the easy thing, which is looking at a chart and seeing what you want to see.
I spent a lot of money and a lot of time going down that technical path because, well, I think you and I are both engineering degree background, and
right.
We were used to looking at charts and using charts to analyze things. It just seemed to make sense. But sitting in these seminars, listening to these people who have technicals named after them and hearing the term, this is what was a turning point for me, was a head fake. So wait a minute. I asked the guy, I said, all your signals line. He's showing a chart with, this is why this is what the stock's going to do. I said, well, hey, 3 months ago, that all happened, but the stock went the other way. He said, well, that was a head fake. That's when I realized maybe the emperor doesn't have any clothes.
Yes, that is. And if you spend time in the market, you know that to be a true statement. You don't need any validation from any other source. It's just BS most of the time. Except, again, there's some self-fulfilling prophecy in it. Everyone looks at the support and then magically it holds.
Yeah.
But but you can't really build a investment philosophy on charts. And also, if there was a advantage to be had, there are much smarter people in hedge funds with all the resource in the world who would be the first to nail it.
Let's transition to what I'm really excited to learn a little bit more about. Is you've created this other company called Skylid Capital Management. So why did you form it? What's your mission? What are you trying to accomplish there? So what is Skylid Capital?
Yeah, so Skylid Capital Management is a registered investment advisory firm, RIA firm, that I incorporated in 2015 and started managing money in 2016, early 2016. So it really only began, like most things in my life, it was pointed out to me by other people what I'm good at. the teaching classes at Options Animal, somebody pointed out to me that, hey, you'd be maybe good at this, because I was doing something else. I was a student, I had a job, and I was doing some work. And same thing for managing money. And I started teaching 2009, 3-4 years of me doing live trades. I had some people saying, hey, if you ever manage money, let me know. And it took me many years to know that I could emotionally deal with it.
Emotionally
Because
deal
it
with
is,
what, managing other people's money?
yeah, I mean, it's also my personality that it's a very heavy burden on me.
I don't know how you do it.
I know that I couldn't just think about it and know the answer.
Right.
Is finally how I started my business. I knew I had to do it. It's an experiential thing. And I think I'm good at it and handling the emotions of it, and especially after going through what happened in 2022. And so I found, I think, what I'm going to do for the rest of my life professionally.
That's great. I know several people, and the guy sitting next to us here has managed people's money in the past. And I'm not going to put words in anybody's mouth, but I went down the path of getting my series, 65 and 7, and registered for the test and started studying. And then I started talking to other money managers and finding out it's one of those things. Oh, yeah, I think I could do that. And then when you realize what you're taking on enormous pressure from
Yep.
people, because you've got a lot of trust, a lot of emotion that's tied up in money. It's one of the most emotional things. And so it's a heavy burden, and it's one that I know that I couldn't take. But so do you take what you've learned from Options Animal and translate into are you using the same stuff that we teach at Options Animal? Are you doing something different? I mean, talk to me about your risk management approach.
Yeah, so the toolkit, you really get all the different types of positions you could take. There are many, there's like 15, 20 different positions or strategies you could employ. I've done two important things. One is to realize what I am comfortable doing, and which is targeting 10 to 15% after fees average return. And so the first thing I do is I only take clients who are looking for that. Because otherwise it's just not gonna, I cannot do suitable positions. And so that really simplifies my life, which is that I can do the same position for everyone. So when I get new money, I just go from doing X number of contracts to a few more, and it's not any more work. The second thing is I only really do positions where when I get in trouble, I know I have a very high confidence in time, and sometimes that time could be a year or two or even 3, that I'll be able to turn the position to profit or a small loss. And a small loss is, maybe 0.15% of a portfolio. And so since 2016, I've not closed a single position for a large loss. Now, 2021, and the positions that are still from 22, I have 4 positions that are not fixed yet. But, Real is one of them. They just had earnings. They were up 70% on earnings. I mean, eventually, I think with covered calls and bull puts to take possession of stock, those are the 2 strategies that I do. Those are really the only strategies I do. There are some support strategies alongside, but those are my main trades. And because I feel, and I've proven now, that 90% plus of the positions I take turn a profit. Some close near break even, some close for tiny losses. So I have one position ever that I don't think I'll be able to fix. I still have it open. And I'm using that to sell for parts. In other words, I'm using that to offset tax liabilities in taxable accounts. And that's because I got into it, as I said earlier, a company that no money coming in, a lot of growth, but no profit. I don't know why I deviated from my approach but I'm never going back to that.
We all
So
learn
yeah,
lessons.
risk management is the same, right? I trade the same companies with the same positions, with the same allocations, with the same backup plans, and that becomes a flywheel type of effect. Recently RTX came into view, did the same position. Some other stock will come down on some news, become too cheap, and I'll do the same exact process. So about 100 stocks or so to choose from.
So we talked earlier about your favorite strategy. Is you do a lot of that in the money covered call, or you feel comfortable talking about what strategies?
Yeah. So I put usually about 5% of a portfolio in a covered call. I might go up to as much as 10, but that is very rare, 10% of the portfolio. And so if I'm doing 5% allocation and 20 covered calls, I've got a portfolio filled up. And some are 3 or 4% allocations that aren't all 5. And so I find at the moment, I think I have about 24 covered calls.
24 different companies?
24 different companies.
Okay.
And what happens, some of them I don't touch for a year. Last year, our clients paid 0.1% commission for the whole year. So $300,000 account paid $300 in commissions. And we made over 30% after fees last year. And it's because of this. These covered calls or other trades like that can be left alone for months, if not over a year at a time.
So I got a question for you. This is separate because this has come up twice in classes that I've taught recently. So sort of going backwards in our conversation, but I've had a couple of people ask me about deep in the money covered calls about a year out. And I think is that you? You hearing that from you? What's the thought process behind that?
Yeah, so everyone wants to do covered calls short term because if I go buy a stock, sell a call a month out, I can get $1 selling that call. And in 12 months, I can get $12. And that sounds really good. If I go out a year,
you get 8.
If I go out a year, I'm not going to get 12. I might get 7, nearly just half. Right. However, if 7's all I need, or even more than what I need, then why not do that? I have an option trade right now, a covered call out to 2026. So almost 2 years out. You know what? It's going to make 30% or so in 2 years. And it's like a stock at 100 where I paid 60. And unless the stock goes from 100 to 60 or lower, I'll do nothing for 2 years.
Okay.
And so I want to have for clients that have been with me for more than a year or two, I want half of their portfolio making that 12-15% a year without taking any mind share or commissions from them.
You might find this surprising, but I'm an impatient person.
Because of my father, I think I'm infinitely patient, except for when it comes to dealing with my family, my wife, kids.
Yeah, so sometimes it's so hard to sit on your hands and not do anything. But
look,
it's a great
if
lesson.
half the portfolio doesn't require you to do anything much, then the other half, like I have positions that I'm getting in and out of. I was in a position in Citi. It was a few months. It made money. I got out. Then I got back in. Another position, a few months, got out. So I can have some part of the portfolio where I have the flexibility to raise cash. Like right now, all year I've been looking to see when the market's going to fall eventually. And when it does, I have a list of, I'm going to sell this first. And now these are trading positions. They're not long-term investments. And that keeps the excitement, as you said, going because, I have some clients, there's 60% of their portfolio requires very little attention now.
I guess that takes some education on your part to calm them down when they're like, why are you not doing anything, right?
Yeah, and again, that comes back to suitability and the client's investment philosophy, all the stuff we do at the beginning, because I take 1 in 3 or 1 in 4 clients that approach me. And it's because a lot of people in the options world think that making 30-40% a year after year, or even more, is just, yeah, like should be happening like clockwork. It just doesn't work that way. I mean,
Yeah,
Warren
good
Buffett
luck
has
with
done,
that. Good
yeah,
luck with that.
21% is what Warren Buffett has done on average a year, which is
Wow.
world class. So if you can do over 10, you can do really well for yourself over time.
Yeah, I think that's important to get things. I mean, is it possible? Yeah, those there. I'm not saying it's not impossible, but you know, world class asset managers that get close to 10%. I mean, that's world class. And
Yeah, because if you just put it all in a index fund or SPY, you'll probably get about 8% a year on average long term. And so if you're a money manager and you're charging fees, I didn't charge performance fees. Last year, we made our clients millions in profits. I mean, I could have made hundreds of thousands in performance fees.
well, I don't know if
But
you saw this report. I'll share it with you if you didn't see it. But Goldman Sachs published a report not too long ago about
the covered call one,
yeah, and how
yeah,
it beats
yeah,
the S&P 500. And this is
it completely validated what you and I already know.
what we already knew, right? And there's people out there that people I have a lot of respect for that make jokes about trading options, and I said, well, I'd like to educate you. But this Goldman Sachs study, looking back 18 years, showed that covered call strategies beat the S&P 500, and the benefit of it is it's you've got lower risk, so lower risk, higher returns. Those are two good things that most traders should be looking at. So it's
Yeah, and it's like listening to music. I always have music playing here in the background, and sometimes I listen to music real loud from my teenage days, right? And other times it's classical. Or covered calls allow you to dial the loudness down to the level that is comfortable for you. So if I'm looking to make 10-15%, I'll set them to make 18, and with adjustments that might come down to 10-15, but I'm not setting them to make 50% a year. I can. And sometimes I look at NVIDIA or look at my AMD, it ran up a lot. And, you have to work with the clients to help them understand there's a lot of money to be made. What are your needs? As long as we're meeting your needs, that's what matters. So if the stock went up 100% and we only got 18, okay, we met our need. Because I've never had an issue with greed. My dominant emotion is fear. And I want to minimize experiencing gut-wrenching. I mean, look, I'm managing a decent size where a bad day could be $500,000 down. And I cannot have positions that I don't think I can recover from.
this is where emotions are so important, and having that sort of pressure, and especially other people's money.
Yeah.
You've got to.
And reading books or listening to tape is not going to do it, right? You have to learn to do it, and you must have, just like casinos, a duplicatable, demonstratable, statistically significant process.
So if somebody's out there looking and thinking, oh, I want to find financial services, somebody to manage my money for me, what advice would you give them if they're looking for an advisor? What sort of questions should they be thinking about ahead of time and asking when they're meeting with somebody like you?
Well, first, if they charge performance fees, I mean, to me, that's very difficult to overcome over a long period of time, right? So if there's a fixed flat percentage fee, which is what I charge, a lot of people do that. I think that's the first thing, is what are you going to pay? Also inquire about what is the expected commission rate that I'm going to pay to the broker. Your advisor is not going to pay that, you will. And I remember when I first started, because I was doing a lot more positions and a shorter term positions that required more active management, uh, we were paying 0.5% of our portfolio in commissions.
That's a lot.
That's a lot. That's a significant amount. We cut that from 0.5% to 0.1% or lower now because of strategic changes in the kinds of positions and durations we take now. But those two, I think, because those are, whether you make money with the advisor or not, you're going to pay those for sure.
So if I was gonna give you money and say, okay, so you're gonna use these option strategies or whatever, what happens if I put my money in and then the market starts tanking? What are you gonna do?
Typically, what happens, because we use options to manage risk, if the market drops 20%, I expect that, and we can run risk simulators every day and say, hey, if the market drops 10, what do you think will happen to this portfolio given the each stock's individual response? And I'm usually set for about half or better. So we've had periods where the markets, the pandemic beginning in March 2020 was we were already in business 4 years. It was a shocking 30-40% drop in a few weeks. And almost every time what we do is lose a lot less. So first thing to know for clients is that if the market does that, you will be down. No question. There's no way that I'm going to sell 24 covered calls and just buy bearish positions for you. Because that drop lasted 6 weeks, mid-Feb to end of March. During that time, when the market dropped 30, 40, even more than that on the Russell, I think, peak to trough, we were down about 10, 15, 17%, not 30, 40%. And that is completely as a result of learning what OptionsANIMal has to teach about risk management. That doesn't mean that it'll happen every time, but most of the time when our stocks go down or the market goes down, we go down quite a bit less. And that allows us to recover much faster. I have a stock, Coinbase. We bought that for $225 before the Bitcoin and everything in that space imploded. The stock went from $225 to $40 3 months after I bought it.
Ouch.
Yeah, that was a couple of years ago. So it's not like I had the perfect risk management for that type of drop to happen. However, that position today is profitable and would have been profitable even if Coinbase had not recovered. Because what we do is if I bought that stock for $225, I'm going to sell options, call options mostly against it. We were able to take the cost basis from $225 to $117 without spending a dime, just selling options, keeping cash. So that allows every single year. I have examples where I bought a stock high, sold it for a lot less, and still made a profit.
I wanted to pause and just point out to people who are listening that you're talking to a professional here who's responsible for managing millions and millions of dollars of other people's money. And he's talking about some very important things. Like you hear this thing, cost basis. And I find a lot of retail traders are too lazy to even keep track of their cost basis. And if you're going to treat this like a business, those are certain minimum things you need to do. And the questions that I ask you, if somebody calls me and wants to manage my money or something, and I get the phone calls occasionally, I'll talk to somebody and I ask the questions, what are you going to do? If a risky thing happens or the market falls out. And I've literally heard the answer, we'll figure it out when it happens. And that is a completely unacceptable response for anybody, whether it's somebody managing your money or somebody wants to manage it, or even your own money. There's no reason for you to have an answer that is, I'll figure it out when it happens. Because the truth is, we mentioned emotions here. Your emotions are going to be very high. You're going to be stressed out. You're, be thinking about these words, these fear, shame, all these other things, pride, whatever is going to get in the way of you making a smart decision. And so being able to control the emotions and have a plan ahead of time is so important.
Yeah. Outside of the costs, if you're going to hire someone to manage your money, the commissions and the fees and all that. This is the most critical thing. When you have a bad stock investment, Facebook went from 400 to 90 something in a year. When that happens, even to the best of companies, what is your financial advisor going to do? Are they just going to tell you to calm down, it'll come back, it's a good company? Or are they going to take a more active hands-on approach? I hate losing money. My number one goal is to never have a client who leaves us. And clients do leave. They take over. Some of them are OptionsANIMAL students. So they feel like, okay, I've learned enough to where I'm going to take it over now. I never want to give them less money than they gave me. And there's, again, if you don't have a known way to reduce risk when bad things happen, you're just at the mercy of the market. And especially if you're retired, you can least afford that.
I remember a while back, you telling a story, and now that I think back, it's probably 2013 and 14. I don't think you were managing money at the time, but I know that you were a big trader of Apple, and Apple didn't get, spent 2 years going down, right?
Yeah.
And I think that time you said something that just resonates with me. I still remember, and I share it. I think you said it was your number one profit in your portfolio. You made the most money, but yet it's a company that went down for 2 years. And so it's possible.
I love this. Everyone on Wall Street is looking for the stock that's going to go up. And you don't need that. You don't need that ever to have that kind of burden placed on you. You pick 10 stocks, they're not all going to go up. But what if you make even more money and they're going sideways? And also, you can keep owning it year after year and keep making money on it, like I do with Gilead.
That's go on.
There's just an educational curve involved, right? It takes some hand-holding. You trade a little differently than I do, than Greg does, and other instructors. And that has been like a wonderful thing at OptionsANIMAL, is being able to get exposed to different ways of doing it. And again, with the goal being, I want to take the least amount of risk to get to the reward I'm after.
Okay, a few more questions. But one more for people who are interested in maybe having a conversation with you. And they can find you at OptionsANIMAL if they're interested in, OptionsANIMAL if they're interested in education. But if somebody's interested in Skylid Capital, how would they find you?
Just send me an email, info@skylidcapital.com. That's SKYLID Capital, CAPITAL. Send me an email. I'll send you my company brochure, my individual brochure, and some other performance details.
Cool. Okay. So what do you do for fun?
I ski for fun.
What's that behind you?
I paint.
That beautiful portrait is done by Charan, right?
That's a German artist who made that in the 70s. I found an image on the internet. So I paint acrylics, and that one's called Raging Bull.
Yes, it is.
All my walls in the house are white. It costs way too much. I love art. I love going to museums. I like traveling, and I like skiing. Every Saturday, usually I'm out skiing, and that's my stress relief, because I don't do any sports. I don't go to the gym. Skiing is, for many months here in Utah, that what keeps me going.
And of course, time with the family. You got 2 beautiful kids and a beautiful wife.
I do. The kids can be a handful, because I have a teenager who wants a car. He's 16, this next week, and the other one's 11, and they can be, I need time. That was the worst thing about the pandemic for me, is they were always here. I like them to not go to school, let me have my space. I'm a private person. I prefer to spend a lot of time by myself. I'm comfortable with that. And so, family is good, but I schedule time with them. Is kind of, I stay down here a lot.
Okay, so what's on your Spotify playlist? You're talking about music. What are you listening to? What's your latest?
I
playlist?
listen to almost everything. So I've had, if I'm not listening to music, there's something wrong.
Rage Against
Uh,
the Machine, Neil Diamond.
I
Anywhere in
listened. I
between?
grew up with rock, which was big in the '80s, and metal, and but I have a gentler side as well. I love classical music. It's very good when I'm doing yoga or just relaxing.
You do yoga too. Cool.
Yeah.
Greg, any other questions or thoughts or comments for our friend here?
No, thanks for letting me be quiet today. I've been fighting a cold, you guys who are wondering, like, where'd Greg go?
Yeah.
I've been sitting in the background letting you guys talk and mostly letting you hear from Char. And I love seeing your progression over the years as we've known each other. Charon's a wonderful human being. It's been, I've really love the guy. So it's been fun
Likewise.
listening to him preach expertise in options trading. It's a great approach to the market, and so hopefully you guys have gleaned some information today. And I will throw one more thing out there. I know we started it with it, but another way to meet Charan, if you want to, is come to Las Vegas.
Yes,
in April.
that's happening on April 12th and 13th. I can't wait. I'll probably bring my wife with me and maybe my rowdy teenagers.
Uh-oh. I took my son when he turned 15. He wanted to come out to a summit. He didn't come to the summit because it was in Vegas, but I actually flew back to Vegas the next weekend. We went to see Beatles Love. He was a big Beatles fan. We went to the Hoover Dam and was it Red Rocks Canyon, and went to Madame Tussauds, and yeah, he had a blast.
Yeah, I remember meeting your son. I think it was in Chicago.
Yeah.
I love going to Vegas for the food. I'm not a gambler, and so I cook a lot at home. And Vegas I think it's better than Los Angeles now for that.
Well, I look forward to having a good dinner with you then.
Absolutely.
And Greg's
Can't
buying.
wait.
Yeah, I'll buy dinner.
Even better.
All right, my friend. We'll see you later. Thanks for doing this, and we'll get it out real soon. We'll talk to you later.
Thanks, guys.
Thank you. Thank you
Bye.
so much, guys. See you soon.